Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacino. Hopefully, this works okay and we don't have any lockups. I'm on backup internet again, so we shall see. Big numbers coming out this morning. Hey, Jacob, good morning. Good morning, Patrick. Good morning, Anissa. Thank you for being here for 6 months already, Anissa. Wow, time does fly. Rams of fall. Good morning. Good morning, Connor. All right. All right. And to the people hiding in the background, thank you for attending. If you are new here, please do consider subscribing, ringing that bell, and hitting the likey button. Other than that, let's just keep a rolling. We had numbers coming out at 7:30. We have ECB hiking 75 basis points, but removing some key language about, month. Well, I don't even remember what it was. It was a hike, 75 basis points. We had McDonald's beaten, able to pass inflation on to the consumers, which was what I was looking for. Higher prices not affecting them as much. So, still, what my takeaway from things I'm seeing with some of these earnings reports, uh, the consumer has not tapped out yet with absorbing inflation increases. So some companies like McDonald's, like some other big conglomerates, are able to still pass along inflation. That's one of the key things I am looking at. Yeah, Rich, Meta hit 2 digits. Oh boy, I guess the metaverse is crumbling. Durable goods, slight miss, coming in point 0.4 versus point 0.6. Again, I don't know if good's bad or if bad's good. I've heard it both ways. I've heard, okay, this means not hike as much, and then we have GDP. GDP, these are the third quarter advanced numbers, expected 2.4. Remember, the prior 2 quarters were both negative. This coming in, advanced numbers 2.6. And this is not going to drop below zero. You're not going to get enough revisions to drop it below zero. Not going to happen. So GDP coming in, above 2%. Then we got core PCE prices coming in right in line, a little better than previous. Again, durable goods X transports month over month, forecast 0.2, drop negative 0.5. Not good. Price index GDP, pretty big contraction there for the advanced GDP price index quarter over quarter. So that could be a sign. And again, okay, anybody who's saying 50 in November, this is somewhat supportive of 50, only 50 in December, but still 75 in November. Initial jobless claims coming in slightly better. Continuing jobless claims, a miss. So with all this, you have hit and miss data. So I got to look at the charts. I don't know what this means. Well, I know what individual lines mean, but I don't know. Is it bullish? Is it bearish? Is it what? Is it what? And then that's about it. I'm keeping an eye on the Kansas City Fed numbers. I talked about that yesterday. Contraction versus expansion. So zero or lower is contraction in my book. So that's what I'll be looking at. Let's see. Good morning, Gary the golfer. Oh boy, we're picking on Kramer, which is fine. His calls have been less than stellar. Good morning, George. Good morning, Sterling. Let's see now. We got that out of the way. Stock market map. Oh, there's your. Oh, that is not a happy number for Meta. 23%. Oh. Let's see. We got Amazon, remember, earnings after the close, and Apple. Amazon down slightly. Baba continues its slide. So, other than that, oil up. Oil up. That double bottom was triggered. Let's keep going through stuff. The communications in the toilet and technology. 89.7% for that 75 basis points. Remember, we're under a week away. I do not see this changing drastically. Negative gamma still there. Fear and greed. We are back in greed mode as of this. Now, this can drop to neutral by the end of today, but we're in the area we're watching for those topping patterns, just using our free fear and greed index. I already mentioned McDonald's, which was a gap up today. Caterpillar was a gap up. I did Shopify was a slight gap, but I did not see their earnings. I still got to review Southwest and MasterCard. Ran out of time with all the ECB. The ECB press conference has been going on now. Apple and Amazon and one of my favorites, Intel, after the close today. I don't think anybody's going to get blindsided by Amazon and Apple. And then tomorrow, remember, Exxon and Chevron. Let's get to the charts. So, the S&P is up from the pre-market. The pre-market. So let me just expand this range, pretty much caught between the two key levels. I'm just going to expand this going into the open now that we have a little further price action. So your early warning sign is about 38.65. I'm going to also be about 38.70 is more key for me. And then it would be tackling the high area yesterday, 3,800 to 39. And then to the upside, we have 39.1250 is the next target. To the downside, breaking below 38.37. Just going to go, let's peek at the 4 hour because the 4 hours in front of there. So minor, watch the 4 hour with this little low reinforcing about 38.23 area. Then I'm going back to 38.09 to 39.74 range to watch for a pullback pattern should we break down into the open. You also have at that 39.74 the rising rotation zone. Remember, there's a pretty big gamma wall at 3,800 also on a pullback. So far inside day compared to yesterday's cycle, still at the top, still trying to come out of overbought mode. The buyers still in control. Good morning, options 22. Santer says Apple will miss. I just don't have a great chart pattern. So, yes, Bob should be here this afternoon. You're already asking about Bob? You don't care about the mic? So, I mean, stuff's still shrugging off the misses. Stuff is still shrugging off the misses. I'm watching. Remember, we can have two kinds of corrections also. So far, we have not exceeded on the closing basis Monday's close, or Tuesday's close. We can still get a sideways correction. So, Joe says if Google missed, Amazon will miss too. I would not be surprised to see an Amazon miss. Also with Microsoft, see what's one of the big things. Think about Microsoft with their cloud stuff softening. What's one of Amazon's big drivers are their cloud services, the Amazon Web Services. If that softens, we could easily see also an Amazon decent miss. So let's see. And I do not have, I went through Apple, but there's just no great patterns. There is nothing I can give short-term levels. Let's get through this NASDAQ. NASDAQ did trigger on the 4-hour basis the double top. Remember, it's got a lot of stuff to chew through. Overhead resistance. Remember when Meta was part of the FANG Mag stocks, and now it's just like, oh well. So, NASDAQ has triggered the targets 11,320, 11,200, and then 11,132. Trying to bounce back to the breakdown zone, but my rally on any continued rally, major overhead resistance is 11,480 to 11,525. So this is the major resistance zone. Cannot get overly bullish in the NASDAQ until we're above 11,525, especially since it triggered a double top. Does not mean you can't have spurts of rallies. Let's get to the spiders and the Qs because we'll just jump to those real quick. Spiders so far, gap up. We have a nice pausing bar on the 4 hour. Key support coming back on a breakdown. There is no great breakdown play till below about 381.50. Right now, it would just be the gap play. The gap play I'd be watching. The gap play, the full gap is to 382.02. Right now, we're almost at 384. So I'd use your gap harmonics for people watching longer term. Key resistance on any rally is still 387.75. Other than that, since we're going to get into the, you got to use the gap fill harmonics for the levels. If you want some other minor levels, you can use your single bar harmonics. The key area is 385.25. So you start getting a 1 hour close above 385.25. I'd watch for a retest of the high area. 386.85 would be the first significant target. 386 would be the next minor target. Again, until the breakdown zone of about 381.50, cannot target a major pullback just yet. And then the pullback area would be 379 roughly with the rising rotation zone. On the Qs, on rally mode, which you have that double triggered on the futures, but on rally mode, right now we're trading 277.74, 277.93. There might be enough to push it for that gap fill on the open. And then would not use single bar harmonics on this, would use the double bar harmonics, and I would adjust it with today's low, but this will give me an area. Roughly 281.90 is the key level to target a return to the 50. Then the 50 is roughly the highs from Tuesday and close to the highs from yesterday. So there's major overhead resistance, but the only thing, pretty much above 281, between 281, and this will come down a little on the open, but roughly between 281 and 281.90 is your key resistance for a rollover zone should we get a through the gap fill and continued a little upward pressure. That's where I will be watching for a rollover play. To the downside, a key support, first level of key support I would be watching is right around about 275.50. You have these two little areas right in here. And then we'd be going to about 274. All right, let's just peek in at our other markets. Dow continues to march higher on a closing basis. 132 is what I'm watching today. Would not be surprised, not necessarily today, but before this is all over, to see us easily tag that 200. Very overextended Dow, very overbought, cycles at the top. So not chasing stuff here. It's a move up stops from my book. Russell, still next key major targets, 1850. Major pullback area at this point. We got to use the 4 hour rotation zone. And any break below about 1815 will be targeting 1800 for the pullback with the rising 4 hour rotation zone. The DAX. Nothing, just a pullback pattern. there's, again, a lot of stopping points in here. Can't get for significant pullback till about 13, below 13,025. Otherwise, consolidating up at this range. So far, letting the rotation zone now catch up sideways correction. Still 13,254 then is the next key. And then I'm going to 13,4, 13,4 to 13,414 in front of this 13,441 targets. The notes. Now getting through. Actually, a little pause at the next harmonic. But we're through the daily, watching for where we close. But this, if this continues, targeting the weekly rotation zone and the roughly about 112.05 area for a continued push higher on the notes. Key pullback level is now resting at 111, 111.03. Dollar index, little snapback. Watch for that snapback to the 110. Hitting there and pausing, but we have triggered that double on the daily. Still watching for that double trigger tomorrow for the weekly close. If we can push through 110 again, next key level is 110.55. Just in front of that is the hooking over 50. VIX, other than that, we have the double targets. The VIX, just a little higher, but I'm going to be watching yesterday's lows, 27.27, and on a push lower, 26.54. What gets me sort of tipping into bearish? It needs to get above 28 to get more bearish. Crude, again, triggered the double, little pullback to that 4-hour rotation zone, allowing the risk reward to get better, and then hitting the first target. 89.40 and pausing there right now. Next target 90.52, then 91.65. Again, your key support 87.20 and then major 86.50. Euro pulling back after the rate hike, but triggering that double on the daily. Major support though coming back at 99.20, 99.30. So that's the key area we'll be watching on this pullback play before probabilities say it should test higher again. Pound, little breakout, reversing at the first harmonic and minor significant level, but key support now coming in at 115. Tesla, again, we've confirmed the double, but not yet triggered it. All right, pre-market trading 230. You need at least a 4-hour close if you want to be aggressive, a 1-hour close on this. The targets 242.65, 249.07, 255.48. Those are for all those Tesla bulls out there. Remember, it's against the weekly rotation zone, so the probabilities are lower. Key support is coming in right now at about 226.50 and then 222.50. I'll glance back at the comments in a second. Apple, again, earnings after the close. Major support areas 143.43 to 141.17. A move below 141.17, and unless we make a new high today, that target will be raised a bit, but that precludes a retest of the lows. To the upside, again, you have to do, there's no fantastic pattern, but even on a pullback, major support coming in at 146.50. That's the prior breakout zone with the rising rotation zone. The key area I will be watching if we do gap lower, though, is that 141 area. On a push higher, again, short-term trend is still up. The targets are 154.50 and 156.75 area with the 200. Cycles at a top. So it's really going to be, I mean, it's a pure gamble. I know we have people predicting a miss. I would not be surprised to see a miss. However, there's the buy, I mean, the most recent buys were back on this bar. We had the bar back on the 13th. Other than that, it's just been a continuation play. So in my book, it'd be raising the stop and trailing out today, going into earnings and taking something off the table with earnings. Oh, Waka Waka. Hey, Waka Waka. You are welcome, Lauren. Amazon, we'll peek at that with earning. Again, there's no great, besides the double is still technically in play after first and second targets. But this was the low probability. Remember, big why? Because it's above the candle bodies. So that just take that. That would be a target for a beat. Not counting on anything with Amazon. Really watching the 111.34 because this pattern, from my trading perspective, is done. First and second targets hit. Lower final target, the lower probability. Key area 111.34. And then, I mean, we've already hit that 87.5 from that pullback area, but on a bigger gap down, I'd be watching these key lows from back at the 101 level. You break the 101 level, for anybody who's trying to take a shot at Amazon on a bigger drop, your targets below these 101 key support levels, which was, again, 101, 102. You tested 1, 2, 3, 4, 5 times. Would be 95.60, then 89.93 are your levels to the downside should you get a big miss in Amazon. Just in case you got something really wonky with Apple and you wanted to take some crapshoot shot, your major harmonic 129.84 tying in with the lows from June. So reinforcing the lows from June. If there's something really wonky that happened with Apple. Not expecting that at all. There's no pattern that says that. Just putting it out there. I know some people like to play lottery tickets. All right. Yes, the Twitter deal is going through. Again, you don't know. He could have taken a short-term more. He could have taken a loan against shares again. Don't know. You'll be able to read it on the tape, but it's just speculation. And, you know, if people say there is no more selling guaranteed, you don't know that either. Because he could have taken a loan against his shares. I don't know. And then sell after you get a pop. I mean, it's been beat down. So if it gets a rally post-Twitter, you know, you could sell at some point. All right. Let's see. Morning, Legion. Any chance you'll be able to stick with us for a few minutes after the open? Discuss your method for I've learned a great deal. Well, I can be here for about a minute. Can we look at Meta? Sure. I can't stick around this long into the open today. I got too much stuff to do. Meta. Hold on. I got a scrunchy mode. Next harmonic 96.73. Did we hit that pre-market? I'm just curious because that's extended. Oh. Let's see. Oh, so very close to 96.73 area. I think you'll get some kind of bounce down here at least. What's the next levels below that? I mean, this is brutal. This is brutal. I'll be watching for some kind of bounce play, but you break below that, the next major area is 90. Can't do harmonics yet, but you have an emotional weekly candle close and a key low right around 90. I'd have to zoom in a little more for a significant level, but that's the next major target in here. By the way, on any rally, 100's going to now be the first resistance, and then 107.20 besides using, and there's the open. Oh, and there we go. Meta, the slam down. Let's take a look. You got the NASDAQ. I'm peeking at that first because we have the double. The double. All right, little buying pressure coming in there straight off the open. S&P confirming. Tick. Very strong buying off the tick on the open. So everybody knows first alert levels. Since we're that high, I'm setting 2 alerts. I want an alert around 0 and alert around 400. Roughly in an area. But that looks like some buying programs kicking off on the open. Don't give me that crap. It did not cross. So, going to watch to see this area to see if it stays above there. If it does, it stays in buy mode. If we start collapsing, first warning sign is below 400, but that's not bearish yet. We start tagging below 0, then I'll keep watching for a rollover play. Just going to scan through the stuff now. Let's just get to that slightly bigger time frame. Now remember, the NASDAQ, this is not invalidated. Let me go through. This 11,621 on a closing basis, 11,658 on a trade through basis, and look at all the resistance. So this could be in play even through tomorrow. All right. So don't get a little, for those bears, don't get a panties in a bunch that oh wait, it's rallying. It's got a lot to chew through before it even invalidates the pattern. Looking like a slight rollover now in the NASDAQ. Again, no on my bigger stuff right here, there's nothing. This is chop mode right here. I got to see something breaking through there with supportive price action. Tick's still holding up very decently. Tick's still holding up very decently. So nothing on the bearish side. But remember, from a bearish side, what do I target between the S&P and NASDAQ? The NASDAQ would be targeted. Why? Because it's triggered a topping pattern and lagging. So, also remember, I don't touch on it very much, but you can look at the tick Q. This is the NASDAQ cumulative index. So if I'm targeting the NASDAQ, I want to see, and we don't have prints yet below 0, so we don't have net selling pressure. But that's what I'm watching for. Otherwise, we don't have the breakdown yet. So I got to watch for some higher price action until we start getting the breakdown tick. Off the open with the S&P now, then I'm going to have to jump. 38.50 is your key support level for the micro time frame traders, and then 38.37. Still, this 38.65 is the key resistance. NASDAQ, your line in the sand now reinforced by pre-market and on the open is 11,400. So that's going to be my early warning sign with a rollover tick that we break down. Again, can't get overly bullish on the NASDAQ, even with this little bounce right here. Why? We're trading into a huge distribution area yesterday afternoon. Again, I have to be above 11,525 before we really get bullish. Let's check the VIX. The VIX so far not confirming. The VIX so far not confirming any major bullish price action. The VIX not confirming. Sorry, I have these things all up at the same time on my trading platforms. I just jump back and forth because if I make them so small, nobody will be able to see them, and I don't want a ton of windows open also. Yes, I know we could flip back and forth, but I just don't want the ton of windows. So, still the cumulative tick holding above that 400 area. That's what I'm still keying off of. With that, hope this was helpful. I would not get chopped in here until we see a substantial breakout or breakdown. This is just chop and slop. I want to peek at Meta again. Ooh. Little bounce play. I would not want to catch a falling knife on Meta. So... but you can do your gap harmonics. Look at that. Oh! I mean, you cannot get bullish for a gap fill play. 117.75. Everything else would be a potential rollover play. All right. So, Raj, we'll have to do those after the close. I don't want to rotate into those after the close. You are welcome, everybody. Mike does it again. What did I do? I don't know what I did. I don't know what I did. There's how we rotate through on the open. Again, NASDAQ looks like it's breaking now. But watch 11.4. Here we go. There we got the NASDAQs. Now I'm going to confirm that. See, now we're starting to get some selling pressure in. It's now reversing with the NASDAQ Q. Now I want to see confirmation. Still, overall, the S&P and NYSE still not breaking, so it's just the NASDAQ so far weak. And still not really snapping. Still not really snapping. All right, I got to go now. So really watch for confirmation. Other than that, don't get shaken by your way. Your next major support is about 11,370. And that's where it really gets interesting. You take out 11,370, and then you can go into more substantial bullish for the day. And possibly, we could possibly tag 11,318 on a significant rollover play. With that, talk to everyone later. Bye for now. Thank you for tuning in.